Good morning, everybody. I was about to say good afternoon. Good morning, everybody, and welcome to SFI Live, your monthly dose of Holly and Tony to talk about the mortgage industry. So welcome. If you haven't joined us before, just before I introduce the guys, if you haven't joined us before and not been on one of these, we are fully interactive, especially when it comes to this particular webinar, because I'm sure you're going to have questions. So as we go through today, if you'd like to put a question to Holly or Tony, use the chat box, which you're all doing nicely. Good morning to you all. So pop your questions in there and we'll mark them as questions. We'll try and get them done. And we're going to sectionalize today's webinar into each policy changes. So I will just explain that as we go through. So if you've got any questions, pop it in the chat box. But in the meantime, some quick introductions. Tony, do you want to just introduce yourself to the audience?
Yeah, morning, everybody. My name's Tony Hall. I'm head of mortgage sales here at Saffron. Been with the Saffron for about 15, 16 months now. And have been around in the industry for over 30 years now.
It doesn't look old enough, does it, guys? You know. And Holly, over to you.
Yeah, so I'm the Intermediary team leader, so I look after our telephone BDMs at Saffron. We are currently a team of 5, but we have the lovely Lizzie joining us on Monday as well. So the team's expanding. So if you do call through or go through to chat, make sure you give Lizzie a virtual wave or a hello over the telephone when she does join us on Monday.
Lovely. Okay, so quickly to introduce what this webinar is all about. As many of you would have seen, Saffron performed quite a big policy update across various different products and across all products in some respects. So we're going to be talking very much about Tony's water bottle. We're going to be talking
very nice one.
You need to get to an event. We'll tell you where to find them tomorrow, actually, if you want to go grab yourself one. So we're going to be talking about these policy updates and things we've done. Holly's not going to be DJing, much to everyone's disappointment. That's very headphones.
I just feel so silly in these headphones.
Yeah, you look
Holly lives in an area where everyone seems to want to interrupt webinars, so we've resorted to microphone and headphones, which is working good for you. Okay, so enough of our silliness. Let's move on. So, as I just mentioned, big policy updates, Tony. It's been an exciting few weeks. We're not going to talk about sort of specific products per se, but we will do towards the end of this. But we are going to talk about others. What was the reason and why was it so important for you to change some of your policies? Let's not go into the details because that's a second, but what was the reason behind it?
Yeah, well, we obviously constantly review our criteria because we need to ensure that we stay relevant and competitive in the markets that we want to be in. So we also looked at our criteria and then looked at the changing world around the pandemic and said, does our policy meet the requirements of today's consumer in a pandemic world? And what we found in a few areas, it didn't. So that's what we have done. We have sort of highlighted those areas and made, the adjustments that we can. And this is the start. There will be more as we continue review, but we've kind of made it pandemic friendly.
Lovely. I think that pretty much nicely introduces what we're about to talk about. So based on what Tony just said, the policy changes we'll be discussing in order. So we're going to do it in sections. There's 5 sections altogether. Those are adverse, flexibility on acreage, update on annexes, contracts. These are 2 big ones. Contractors, including 0-hour contracts, and the very final one, which I'm sure a lot of you want to hear about, and that's the changes for the self-employed. I think that's by far the biggest change we've got on there. And then towards the end, if you've got any questions we haven't gone through in each section, we'll catch up with the questions at the end. Or if you've got any other questions generally on working with Saffron, on policies, on anything to do with Saffron, underwriting, anything like that, if we can answer it, we will. So do pop your questions into the chat room. We'll always like to hear it. There is a poll active. We'd be very kind if you'd be able to just respond to that to say whether or not you've worked with Saffron before, and then we'll know how to tailor the rest of the content today. So without any more, let's move over to our first section. And Holly, I'm coming to you first. We're going to be talking about adverse. So what are the changes you've made and why?
So the main change that we've made is that we now consider unsatisfied CCJs in defaults. So there's 2 parts to that. So if they're up to £100, then we automatically accept them via our system. But if they're between 101 and 250, they'll go to our underwriters to review. just to see if we're happy to consider them. So we can consider unsatisfied CCJs and defaults up to the value of £250. And the reason for that is, as many of you may have seen with your clients at the moment, you've seen small sort of credit blips on their credit profile, whether it's during the pandemic or even before that. You know, some companies and utility companies especially are quite quick to switch on and put on a CCJ or default onto personal credit report. So, you know, with that in mind, we thought we've always considered satisfied CCJs and defaults up to a certain value, but we thought, no, we need to be helping those as well with the unsatisfied CCJs and defaults.
Okay, so how does this differ, Tony, from what it was before? How much of a change is this for you guys, and what have you changed about your own processes on this?
Yeah, so I mean, you know, the biggest thing is we didn't we weren't accepting of unsatisfied defaults or CCJs. So, and all of them had to be satisfied for a minimum of, Holly will jump in here if I get it wrong. Was it minimum of 6 months, I think, in certain areas? No, got it 100% wrong. But anyway, we'll come back. We'll gloss over my lack of knowledge there. We'll come back to that in a bit. But the key thing for us was, as Holly quite rightly said, is, you know, in fact, let's take it back a step. So as a lender, okay, we are not here for those who have got significant bad credit still and are trying to borrow their way out of that. Okay, that's not our market. There are a lot of lenders who will help with those customers, and quite rightly, that's where you should go if you've got clients in that kind of difficulty. What we're all about is those who have credit that is now restored to a degree, and can demonstrate the affordability of the loan, and demonstrate that they can meet their commitments, but might have a minor blip or blips up to that value that Holly talked about from their recent past. And basically what we've done now is saying we're not going to hold those against you. Okay, we know what's happening in this pandemic. We know the rise of adverse credit on the market. It's been growing steadily before the pandemic. It's just now being exacerbated by it with furlough and drops in income and everything else going on. So we're just being more acceptant of that. And really, but we're not here to bail people out who cannot manage their finances. That's not us as a lender. We are here for those who have learned from a problem but are struggling from that problem because the high street still won't lend to them, whereas we will.
And I think it goes back to something we discuss often for the new visitors. There's quite a lot of new people on the webinar today, so just to tap into this common sense lending, but also telling the story. There's a phrase, Tony, you use often about telling the story. So if there are little blips, what can they do to make sure that your underwriting team and your team, Holly, what can they do to make sure that's notified and satisfies an underwriter?
So I think the key thing is, you know, we do an experience search as our credit search. So have a look at their experience report, you know, identify where those issues are, have a chat with the customer, find out, you know, why has this arisen? Is it something that they're currently challenging with the person that's issued them with the CCJ or default? And just a little bit of a backstory. And if there's something that you feel that they need to add in, then please do add a note to the system when you submit a decision in principle, just for our underwriters to review. We have the note function on every single decision in principle, and that will go straight to the underwriters to review.
And that's across the board, isn't it, Tony? The telling a story. It's not just about adverse, it's about generally, isn't it? So just sort of giving you a picture of what. Exactly.
Look, in fact, before I come to that, if I can just jump quickly on what Holly said there about how to help us help you, is have a really honest conversation with your customer. Because what we find a lot of the time is your client has told you X, and when we've done our search, we find Y. Okay, so you know, the client is not being open and upfront about some of the issues that they faced. And that obviously doesn't help you, because we're going to turn around to you and probably say no, because we've got undisclosed credit somewhere. So what I would urge is that you, wherever you can, have that honesty conversation and get us the answers we need up front, because that way we can tackle it and give you a quick no or a quick yes. You know, either way is ideal for you and for us, and that would just help. So that's on that side. On the telling the story, That's so important for us, because as a lender that is, 100% of our decisions are made by a human being, or our system will accept a dip, but it's always an underwriter that will make the final decision to lend the money. They are brilliant, but they're not mind readers. So with a lot of our cases that, the kind of cases we get, those with complex income or just starting employment or just starting self-employment or have X or Y or different income sources, it is something that you need to tell us about. So we have a notes functionality within our decision in principle that you can tell us the story. So we just urge you to do that. And then that way, if it doesn't get an auto yes and it goes to the underwriter, they can make an informed decision as quickly as possible for you.
Okay, brilliant. And I think the key message that I took from this, Tony, I think we need to just reiterate this as a final point. By the way, if you have any questions on the discussion of adverse, please pop it in now, because we're moving on to the second section very shortly. So any questions, please pop them in now. But I think, sorry, going back to what I was about to say, the key message here is we're not a bad credit lender. We're just allowing a bit more flexibility based on the fact that the pandemic has had an impact on people. Is that the correct message, Tony?
Yeah.
Okay. There we go. So Tony did mention about sort of telling the story, and so did Holly, about putting that information in. If you haven't registered with Saffron, well, actually, I want to know if you have. So there is a poll on the webinar right now. It's just going live. Just to ask you if you're registered, so we can get an idea if we need to send you any details on how you can get registered and find out, keep up to date with what's going on at Saffron, but also get your applications in. So we will share that with you later on. So moving on to section 2. Tony, I'll come back to you. Sorry, but it's flexibility on acreage is my title. As everyone knows, I don't work in the industry, so I'm going to need to explanation this. What is this new flexibility? Can you just explain to the audience?
Yeah, definitely. So before the policy change, we would allow people to buy property with land, but we would limit that acreage to 3 acres. Okay. And that's largely because we didn't want people buying a residential property for commercial reasons, if I'm honest. That's the challenge. So what we've now done, and we've looked at the changing needs of today's house buyers, and a lot of people are moving out of the urban centres into the countryside, and they're wanting more space. What the pandemic has taught us is that we actually do like our space. And we've seen the rise in people wanting to buy farms or property with more land. So that's why we've now extended our maximum acreage to 20 acres. Okay, which is, that's not a bad back garden, if I'm honest. I wouldn't want to have to mow it personally. But what the challenge within that as well is that sometimes within that you'll have people who want to hobby farm. And some lenders' policies won't allow that. It purely has to be for that residential use. We are, however, accepting of non-commercial farming. So if you've got someone that wants to hobby farm and have some, sheep, pigs, chickens, llamas, as long as it's for their own usage, that is absolutely fine with us. So if you've got customers who are looking to get out into the countryside and get more for their money by going more rural, then we're a great home and a great conversation to have if you want to support that.
Great stuff. And just going back, sorry, this is a bit of a delayed question. So we're just going to hop back to the last one on a bit of a default. So Gemma's just putting a question. Would you accept a default for £1,700 registered 2 years ago? No other issues, and it has been cleared.
So that would need to be settled for 2 years. So from registration date, you would then need to settle it within 2 years. Anything over £500 of a default or CCJ needs to be settled for over 24 months.
I hope that answers your question, Gemma. Adaya, we are coming to you with the self-employed. Just to contact a little bit further on that. So just going back to the acreage, I just want to get out of the way so we didn't forget about it. But just going back to the acreage, you said about hobby farms. I think that's a really distinct message there. This is for their own personal use. So this is somebody who's looking to be self-sustained as opposed to somebody who's looking to sell in in a farm shop or etc. Tony, that's a clear message on that one.
Yeah, it's a residential purchase that just happens to have up to 20 acres with it.
Okay.
And,
and then the questions are coming in on this one.
And I'll just say straight to Holly with those, please.
Yeah, Holly, agricultural ties. These actually, Kerry's and Ian's both match. We're going to ask as a double-ended question. Would you accept overage agreements on land or an agricultural restriction and agricultural ties for Ian, Holly?
Yeah, so agricultural ties is a no. Overage agreements, it depends on the overage itself. So what the restrictions would be going forward. That's the key thing. Any restrictions on a land or a property, it depends what implication it could have to resaleability going forward. So it's always worth, if you do have one, giving us a call. But agricultural ties as a policy at the moment is a blanket no.
Okay, that was a really short, brief section, and mainly because we have quite a lot coming up on the later ones. But if you have any questions on acreage, and you would like to discuss any questions, just pop them in. And as I did this time, we will jump back and go to others. So welcome to new viewers. We've had quite a new viewers pop in. If you do have any questions, pop your questions in the side box, and we will get to them, and we will answer them as quickly as we can. So we've moved on from acreage and adverse to another A of annexes. And Holly, we're coming to you this time. Annexes. So what is an annex for anyone that doesn't know? Pretty sure everyone does. But what's your policy change and how will it affect people?
So for us, it's just being able to accept properties with annexes. Before, we've been quite cautious. And to be honest, I'd say 9 times out of 10 when an annex came to us, there was caution around it and we wouldn't lend. Whereas now, as long as it's for their own personal use, so that could house a family member, it could house their nanny in there, for example, then we can consider it. So it's either, an extra room, kitchenette and bathroom off the side of their house, or in a completely separate property that is self-contained. But yes, annexes are now acceptable, which is great. But as we stipulate with the policy, it is for their own personal use, so not allowed to be sublet.
When you say their own personal use, Holly, can you just go into a bit more detail about that? What are they allowed to use it for?
Yeah, so they could use it to say, for example, if they're teenage children, they want out of the house, they can put them in the annex. If they have older parents that they want to move into the annex, absolutely fine. If they have a nanny or an au pair, for example, that want a separate sort of annex to the property that they can live in, that's absolutely fine as well. So it's just for sort of non-related parties that, would be paying rental on the annex, wouldn't be something we would consider.
Excellent. I like that, because I was hoping you were going to say something like an au pair or a live-in nanny or something, because I think people forget about these. Some people rely on these things as their full working parents. Great stuff. What does it mean for the end client, though, having this? I mean, just for my benefit, it's a question that I'm going to ask, probably completely irrelevant. Well, if they wanted to build an annex, they want to build an annex, how do they go about that with you guys?
So, I mean, with annexes, they can look to build, so you can capital raise to build an annex on your own property. That's absolutely fine on a residential. If it was quite an extensive build, we might look to be putting it towards our self-build mortgages rather than standard residential. But you can capital raise for building an annex. It is something that we would consider. And, I watched a really interesting presentation yesterday from a gentleman at Rightmove, and he said annexes was the third most searched for topic in 2021, and compared to 2018, where it was never searched for previously. Along with that, you've got acreages, garages, rural and land. So you can see how everybody's priorities have changed during the pandemic.
I was about to say that the pandemic has really shifted people's use of their homes. Obviously, you can see we're all at home. Many people are working from home. They're finding that they've not got enough space. Perhaps they want to just expand the space they've got. They've got a bit of land in their garden. That's what I was just trying to get across there. We've had some questions on this, actually, from Penny. What if there is separate council tax and separate access on the annex?
So I would say separate access, fine. But if it's separate council tax and utilities, that usually allows it to be sublet, which we would say is a no. It's got to be sort of almost contained in the property, land and title. So separate access with a different door, fine. But I'd say separate council tax or utilities is one we would probably steer away from.
Okay. Kerry's also put in it. Kerry Howard, would you lend on a townhouse that has a self-contained flat in the basement, all on one tile?
Again, if for personal use, yes, we can consider, but if there's that separate utilities and council tax issue on that property itself, then unlikely that we would consider.
Okay, thanks, Holly. I think that's everyone. Did I ask you the woodland question? No. Would you end up woodland that is going to remain woodland?
Yes, if it's within those 20 acreages, it will be valued as 20 acres, and we would know that woodland. The only thing that we might worry about on that one is who has access to it. So if it's got, a public footpath walking through, anything like that could just affect us later down the line with repossession or resaleability. So yeah, it's just knowing a little bit more about it. Again, it's one of those ones where you tell the story, and we would go to our underwriters to chat it through with them.
Is that phrase again? Tell the story. Tell the story. It's all about the story, guys. As much as you can tell them, the better. I think it's the key message there. I'm not ignoring your questions. They will be coming up later in, so don't worry. We'll come through to you. So we're going to jump quite conveniently now to contractors, because there's a little bit more detail in this one. But also, I think it's just we can sort of go in a bit more detail with this. We've got a little bit of time. Guys, we're moving on to contractors. Any questions about any sort of clients that are contractors or any issues you've had in the past? Now's the time to get your questions in. You've got 10 minutes. So pop your questions in, and I'm just going to attack Tony this time. We know we're talking about a specialist product now, a specialist product for contractors, for those that can't fit within a normal mortgage. But what Holly says you here, but I'm going to Tony. Can you just list? Oh, actually, no, Holly. Can you list? I just realised I've got to do it.
There's so little faith in him, Jay.
Exactly.
You know what, Tony,
Right.
can you give us an idea of who contractors are? I think you can do this one. It's fine. So,
No.
I think everyone just assumes that contractors, a natural assumption outside of the market is contractors are just people who work on building sites. That's not the case, is it?
No, for us, it's anybody that is on a fixed term contract. We're not specific on industry, whereas other criteria that other lenders might be. They'll stipulate. We are very comfortable. We're very comfortable that you've only had to have been contracting for at least 3 months for us to consider you. As long as you've got kind of 2 years experience in the field that you are contracting in, that's good enough for us. Holly's not looking too scared, so I must be on the right lines at the moment. So, it doesn't matter what the contract is, as long as it's fixed term and it's evidential and we can see it, then we can consider it.
Sorry, what was the change in policy then? So we've had some changes.
It was more clarification around, just to help make it more obvious to everybody exactly what we can do. So we provided some clarification around days worked and our calculations there. So we're at contract daily rate times days worked in the week, with a maximum of 5 days times 48 weeks. So that gives you your key calculation for the affordability. We also just clarified that we are accepting of CIS workers and what we will accept. And Holly can give you the details on that, because that's beyond my scope. But we're also gave some clarity around 0-hour workers, which is clearly a big part of the gig economy anyway, and a big part of the aftermath of the pandemic as well. So, but I shall refer to Holly now for those more finer details. Oh,
I'm thinking
you're on mute, Jay.
Yeah, I'm thinking Jay's saying, talk to me about
Sorry,
CIS
I had a
workers.
plane take off again. Anyone that watches the show will know I live very close to an airfield, and I've just had a load of planes take off. So this lends beautifully into this. A lot of questions that come in on CIS, which we can explain, Holly. But also, can you just touch on 0-hour contracts, and then we'll come to James's question afterwards.
Okay, so CIS workers, so they must have a minimum of 2 years industry experience, and we will require a copy of their CV to clarify that. They must have 3 months as a CIS worker, and we will look at the contract of employment if they have one. And if they don't have one, then we will look at averaging out the pay slips that they do receive. So that's the key thing with CIS workers, and a fantastic change as well to policy. That is one thing that Tony missed, is that we've now gone up to 90% loan to value.
Thank you,
to
Holly.
be able to help on those ones. So that's a great change within our contractor policy. And the other question was for it was 0 hours
0 hour
contractors.
contract, that's the one.
So 0 hours contracts are slightly different in how we look at them. So they actually do have to have 2 years 0 hours work experience. So that doesn't have to be with the same employer. That can be across a variety of different employers if they just go from 0 hour contracts to a 0 hour contracts. And then what we do require with them is that they must be the secondary income earner on the application. So they can't be the main income earner. They do have to be the secondary income earner on the application for 0 hours contracts. Very similar criteria to our agency workers as well, and bank staff.
Wonderful. Questions are coming in on this section. Newlywed. Is there a minimum income for a fixed term contractor? Holly?
No, it's just that affordability calculation that Tony went through. So the days, day rate times the days worked times 48, and the maximum for those days worked is 5 per week. Okay. And sorry, the other thing, because I always miss this one out, is we can consider multiple contracts running at the same time. So as Tony said, we don't have a restriction on what industry that people work within. We've had quite a lot of people that work within the film, television industry, but also the healthcare industry. And both of those they can have multiple contracts running at the same time. So we can consider that. And there's no set end date to the contract. We just need to see an end date. So if it's going to be extended or renewed and going to expire during the big application process, then we will want to see evidence that it's being extended or renewed. But there's no set defined period of time that we'll need to see.
Hope that answers that question. They're coming in thick and fast. Again, guys, if you've got questions, we will answer them. So do please pop them in the chat room because we love getting questions. It fills up the time nicely, and it actually means we're giving you content you want to hear. So from Suntalk, what is the maximum break between contracts for contractors? So some contracts have taken several months off and are now returning to work within the same field.
Yeah, so we can consider gaps of employment, but we need to know what they've been doing. So it could be that they've taken some time off for parental care for their children. It could be that they just decided, contractors do tend to take larger breaks just due to the nature of the business. So we just need to know the story. Again, it's that famous phrase of ours, tell us the story as to why, what's been happening, what have they been doing, and now great to see them back in work.
Jack and Ori tell the story. That's the way forward. Penny has asked, just a clarification, Holly, on this one. If a client is on a contract and has 6 months to run and has been in the industry for 2 years, that is okay?
Absolutely fine.
Penny, I think I knew that. I just wanted to double check and we're getting the final answer from them. So that's good. I'm learning. Will a CIS contractor, will you allow a vendor gifted deposit?
So as standard, we only consider vendor gifted deposits when they are purchasing from their landlord. Any other vendor gifted deposits we wouldn't consider. Normally gifted deposits for us are from close family members. But if a vendor gifted deposit is only acceptable in the scenario of purchasing from their landlord based on good rental track history with them, a bit of a perk basically.
Is there any other detail you need, Holly? Any advice you can give to those viewing and those that haven't worked with you before, certainly not on a contractor? Any advice, any tips, any guidance you can give just to kind of tick off all those questions they might have that not asked?
Where do I start? I think that's a whole podcast in itself. But, all of our criteria, we have actually updated our website. So we've got a criteria search function on the website. So if there's any sort of questions that you do have that, a quick fire, you can have a look through on there, but always chat to the team. You've got the telephone BDM team, but you've also got our fantastic on the road BDMs now covering the north and the south. So you've got Phil who covers North region and you've got Simon who covers the south, and we can send out their contact details after this webinar as well. But yeah, any questions, please do come to us. And, even if you find it on the website and just want some clarification, we're always happy to chat. We're a chatty bunch. You can barely get us off the phone. And again, we've got a live chat function which we've been running now for nearly a year, 9 till 5 during business hours. So you'll always be able to get hold of somebody in the team should you want to. And again, criteria is on the website. So there's some really useful sections, including the supplementary documentation, which will give you a list of all the documents required for any type of application too. So just have a sort of wander around our website, and need any help or guidance, just get in contact.
Yeah, we'll share some of that in a second, just so you can have a look and know where to register. If you're not, for those 13% or 14% that wasn't registered, we can tell you how to get registered. Stephen, nice to have you back. Name I recognise. Flexible contracts. Holly, I'll come back to you. Tony, you go next. For example, an actor may be contracted for 6 months and has no work for 3, then a new contract for another specific time period.
Yeah, so what we would want to see is that contract, so say they'd started a new one, they'd have to have a minimum of 1 month within that new contract. But again, it's just that it's just knowing that they've got the 2 years industry experience. So were they employed as an actor before? What kind of work were they doing before the contracting of the 6 months? So again, I hate saying it because it's a most said phrase, but just let us know. Tell us the story.
Lovely. And Tony, just quickly over to you. In that contractors, the same as self-employed, especially we just talk about actors, a prime example. Theatres were closed, there was no work. How much flexibility can you provide to those that have been affected but have bounced back, as it were, from a contracting perspective? How much flexibility do you have, and what can brokers provide you with to give you a better snapshot of that person's career?
I think, you know, we will be as flexible as we can be, as provided we can demonstrate responsible lending. So can the applicant or applicants afford the loan, you know, with their income? And is it evidential enough for us to go, you know what, we're lending this person the money and actually they can continue to pay us back? You know, the fact that we can repossess their property and all that is irrelevant in this. It's about how can we make the right lending decision. So if we can do that and it makes sense, then you're going to probably get a yes from us. If we can't do that, then you'll get a no from us, because we cannot demonstrate that we've lent responsibly, and therefore we're putting the customer into a position that's not tenable from their perspective. We can't lend money on the basis that we know we can get it back if we repossess the property, you know. So I think that's the key one for us. That's where the flexibility comes in. You demonstrate to our satisfaction that it's affordable and the income is sustainable, then that's going to be a great conversation. If you can't, then quite rightly, we're going to probably say, sorry, we can't help you.
And it's all down to that story again. If you could fill the gaps in, you know, I think the point we're trying to get across here really is that everything in Saffron is about people. People need to understand what the story is, what's going on. And so, you know, as much detail as you can give, as much people can educate themselves, the easier it is to give a more firm and fairer response based on that person's situation. That's good. Just a quick question, follow-on question from Penny Holly on something you said earlier. If you need someone to be the secondary owner, does this mean a single applicant's going to struggle?
Yeah, it will do, unfortunately.
Okay. Have you any more questions on the contractor product at all? Maybe Holly, just a bit of an outline of the product itself, maybe LTV. Any specific features?
Yeah, so as I mentioned, it's 90% loan to value, and any contractors that are on a fixed term or short term contractor would need to go on our contracting product range, which is advertised under our special situations mortgages on the website. The applicant themselves would need to have 2 years industry experience, a minimum of 3 months contracting experience, and a reasonable time left on their existing contract. But as I mentioned, that reasonable time is no set defined 1 week, 1 month, 3 months. It just really depends on a case by case. If the applicant is a contractor that's had multiple contracts and, you know, is very experienced, quite often has them renewed or extended, it's the less time that we need to see, because we understand that it's likely that they would be extended or renewed. And again, gaps of employment, as long as it's explained to us, we can consider. And the fantastic day rate calculation that we like to always shout about is our day rate times our day's work times 48.
And all that information is available on saffronforintermediaries.co.uk. So don't worry, I'll say that quickly. We'll come around to that later. So if anybody hasn't visited the site yet, we will tell you where to look for that a little bit later on. Okay, I've left us plenty of time for this next one because I have a feeling we might need it. Questions on self-employed and self-employed mortgages, and on specialist self-employed mortgages, issues you've had with self-employed applicants before, now's the time to get your questions in. We're going to be dedicating a fair amount of time to this. So now's the time while I come to you, Tony, in that the self-employed change is probably one of the most considered and considerable of the policy changes. First of all, why? I think we know the answer. But first of all, why has this happened? And then we'll go into detail a bit later.
Yeah, well, self-employed, pre-pandemic has always been a key area for Saffron anyway. So we haven't changed our policy throughout the pandemic to this point and we've kind of now got to it and said, right, we want to be a real specialist in this area. So what do we need to do to support the market even further from where we currently are? So that's why we've made the changes. That's why we're now at 90%. We've got ourselves back to 90% loan to value on self-employed, which is something we were before, and we've always wanted to get back. And we're really delighted that we could do that this year. We obviously been accepting 1 year's accounts for a while anyway, so that wasn't new. But I think the key thing to recognise the challenges for the self-employed and the great way that a majority have bounced back is the fact that we have now provided our underwriters with discretion to ignore the pandemic trading year, the 2021 trading year, in the right circumstances. So I do caveat that in the right circumstances. That doesn't mean we'll just ignore it for the sake of it. We need to see an ongoing sustainable business as a result of trading now by looking at bank statements, etc., etc. But we're recognising of the situation that the self-employed have been in, and that's why we're delighted to make that change. And we have the capability and the experience to do it. We've got experienced underwriters that are very good at understanding accounts. I've got BDMs, and the phone teams are very good at understanding accounts. So we can provide that support for you and your clients.
So can we just go on that caveat slightly, because something we need to do, in that it's not a blanket we're going to ignore last year. This is last year can be pushed aside as long as you can prove before and after. I think is a good way of describing it simply is if you're trading well beforehand and you're trading well now and you've recovered, then that's kind of the minimum. Is that right, Tony?
Yeah, basically, if you could demonstrate that dip was as a result of the pandemic and the fact that now that conditions are starting to stabilise, that your turnover, etc., is on that growth path to where it was previously or where it is now, because obviously a lot of businesses are actually improved their trading performance during the pandemic. So it's just, again, to use the old phrase, I'm going to get a sign, tell us the story, and then we can, we can move that on. The other bit that, I'll come back to that because I've completely forgotten what I was going to say. So back to you, Jay.
I've got another question, so it's fine. I'll come to your questions in the chat room shortly, guys. But,
I've remembered it now.
I'm going to make it full screen again.
Just while I remember, is the other thing that we did, not for this policy change, but it's worth talking about. We added this in previously, is that if we've got a business that's been trading 2 years or 3 years, we are happy to take that final year's figure if it's showing an upward trend. So we won't just average out as standard. We'll take that last year's figure if it's in the right growth trajectory. Okay,
that's good to know. Okay, I'm going to try a complicated question out here, but something we've covered quite a lot. Let's talk about grants, because this comes up often. Many people would have taken the government grants in the last year. Now, just having the grants has, with other lenders, meant that people haven't got through the application because they're looking at it thinking, well, you've got this money, you spent it, blah, blah, blah. Where we've also had, brokers come to us and say, well, they took out the grant, but they didn't spend it, they gave it back. That's different. But obviously that money goes into those accounts, you see it. So how does that now change with this new policy? You're going to have to look at the last year, surely still. But how does the grant process affect any applications?
Yeah, so I think with the grant process, I'll jump in on this one, is that, accountants advised people to take their grants because it was available money to them. So, they shouldn't be penalised for taking them. What we do is we look at the situation they were in. So, did they have to completely close down their business? So, for example, hairdressers, or was it that they were a restaurant which they managed to diversify and do takeaways during the pandemic, but they still took the grants because there was a section of income that they were losing from not having in the sit-in diners or hairdressers being able to do hair. So, it's just knowing a little bit more about them and why they've taken them and what they've done with the monies. But if we think, for example, that the grants have then propped up their profits, then we may look to deduct them from the accounts, which is sort of sensible because we can't guarantee that they're going to perform that well in the year ahead. So it's the underwriters getting a bit of an understanding. And I don't think we've really touched on our underwriters and our manual underwriting. They do take the time to look at these accounts, look at company's house, look at the information you provide to really get a good gauge to how the clients have been working, not just during the pandemic, before, and what it's likely that, we might go for an accountant's projection where we'll ask, are the applicants looking to be working at the same level, if not more profitable in the year ahead? Now, we don't ask the accountant to say it's going to be this exact amount. We're asking them that question, what do they think the performance is likely to be, the same or better? That's what we're looking for, some clarity going forward. So, we didn't change our policy during the pandemic. And that was the one thing, we didn't change our policy on furlough, on the SEISS grants and the bounce back loans. We didn't change our policy. We just adapted the way of our underwriting to make sure that we're being a responsible lender going forward. And again, the grants aren't being looked at negatively. They're just looked at sensibly.
Because I suppose I actually know this from experience. We're not going to say this time, she'll kill me. But somebody I know has taken out the grant to diversify. So actually use the money from the grant to build a business. And actually, when you look at, if you were to take that off her profits, actually, she's still exceptionally profitable because she had to completely diversify. As you said, shut down business, gone for a year, nothing you could do, but actually needed that injection to get the equipment to move on to another diversification. So I presume now that just means that and through your process, Holly, you said about the manual underwriting, you can tell that story.
Yeah. I tried to avoid saying tell that story because I feel like that's what I've said today. But it's just giving us the information that you've got about the client and as to why they've done what they've done over the last year. But, as many of as brokers, they will have been advised by their accountant to take these grants because it's available to them. We're seeing that constantly as sort of questions going forward. So, yeah, it is, again, telling us the story of as to why and how, and then seeing what we can do to help. Because at the end of the day, that's what we're here to do. We're here to help clients get into their dream properties.
Okay, I'm going to go to some questions because we've got some in, but I've still got some questions for you. But I just want to bring these questions in for the guys now. Anybody else, any questions? We have 15 minutes left. So we're accepting questions from self-employed. And then if you've got any other criteria, questions, any questions about working with Saffron, anything you want to ask Tony and Holly, I'm leaving the last sort of 5 to 10 minutes of the webinar to put your questions to them. So absolutely any question, please submit now. But likewise, you've got self-employed, we need those now because we're going to move on. So from Michelle, what's the condition for accepting 1 year's accounts if they've improved this year from last? It's not an average question mark there. So who wants to take it? Holly?
I can take it. So if there's been a year-on-year increase and it's deemed as a reasonable increase rather than, say, for example, the one that we always like to use is the 5,000, 5,000, 50,000. That's a not considered a reasonable increase. That's a huge jump. But if it's, for example, 10, 20, 30, that's then considered a reasonable increase where our system will automatically look to take the latest year's figures. It's being comfortable. The underwriters need to feel comfortable that level of profit is sustainable going forward. We have a lot of applicants that, for example, are only have 1 or 2 years accounts where they go on our self-employed product range, and a lot of people have a smaller profitable first year because of a lot of the startup costs, but then they have a fantastic second year. I had an example of that quite recently, and we did look to take the latest year's figures because going forward it was deemed as sustainable. So it's just finding out a little bit more information and beyond. Say to us, you know, the first year was a startup year. That's why it was such a sort of lower profits, and that's why they've seen such a big jump in the year ahead. So our system's built to take the latest year's figures if there's been a year-on-year increase, but anything less than 3 years, so 1 or 2 years accounts, must go on our self-employed product range. 3 years are eligible for our standard product ranges.
Okay. I hope that all made sense. Any questions on any of that?
Sorry.
I'm not in the industry, so I'm sure the folks are fine. But if you haven't got any questions on what Holly just said, pick it in the chat room and we'll pick it up. Nice to see new faces. Lots of people sort of coming in quite late. So if you've got any questions on what we have already covered, which has been acreage, annexes, all the A's, acreage, annexes, adverse, and contractor. We're currently on self-employed. So any questions you've got, pop it in. Got a long question from Karen here. I'm going to read it out and then see who wants to take it. I have a self-employed cameraman and self-employed hairdresser pre-pandemic showing good net profits. Currently back working again to a good level. Took out the ACISS grants, really hard for me to say. Existing lender has turned them down for 75k mortgage on a downsizing situation. Does it sound like one you guys might be able to help with?
Go on.
I would say, yeah, I think it's one where it's a conversation and we can find out. Obviously, we need to understand a bit more why their existing lender is saying no to them, bearing in mind that existing lender will have their track record and their payment history. But I think so. I mean, Holly can corroborate, but it's a conversation to have.
Definitely. What I would have said on this one is I'll take your details after the webinar and get in contact with you, but it's one I'd like to chat with our underwriters about. We meet with our underwriters on a daily basis in the morning, so we have an opportunity to run through any cases where we want to ask questions. So I'm more than happy to have a chat with them. It'll be tomorrow morning and go through the case. So I'll get in contact with you later today.
Okay. For very various purposes, I can't mention what Karen's put, but have a look in the chat room.
Perfect.
So you can see the answer there. So Karen, do send details through to Holly. We can always have a chat with you and sort that out from there. James, we'll come to your question in just a second. I just want to pick up on something, Holly, we went into with the manual underwriting and heaven forbid, telling the story. There are some assets that they can get, though, aren't they? Like, letters from an accountant, people who know them. Are there any really, really useful assets that a broker might not think, oh, actually, I could get that quite easily and that would really help them? So from a manual underwriting perspective, what are those like almost top tips of things that, go get that? That'll help loads.
Yeah, I think the one thing that I would say is proof of income. So whether that be their limited company accounts or their SA 302s, anything that you think is going to support it, as well as 3 months trade-in business bank statements. Now, I'm not going to say the underwriters at decision in principle stage are going to look through them with a fine-tooth comb, but it's certainly going to help. Maybe they have a question that they can look through and refer to just by having those documents available. So they won't do a full deep dive into the accounts because it is early stages at decision in principle. However, they are happy to have a look if there's something in particular that you as a broker want to share about the applicant. So please do. There's a document upload function on the mortgage portal when you submit any cases to us. Just put some details on the system. I was about to say tell a story. I just had to.
We're going to go on the history to tell a story, gang. That's all we ever seem to say. But it is, maybe we need to find the next webinar. We're going to come up with a different way of phrasing that, right? We're going to come up with a different way of phrasing it.
Story to tell.
I would just quantify, just actually while it is about the story, but it has to be a non-fiction story. Just to quantify. Don't give us the story that can't be backed up or evidenced. I just thought I'd add that in, not be a longer strap line, but it's got to be the truth. That does help.
The true story. There we go. The biographical story, autobiographical story, should I say. Okay, so into James's question. Limited company director, 100% shareholder, paid PAYE plus dividends. Do you take this as income or the net profits of the limited company?
Let me just read that one
Have
again.
a read
Hang
of that
on
one.
a second.
Wait till you get around that one. I'm going
No,
to oh, you got it.
No, that's fine. So it's one thing we haven't actually spoken about just yet. So we can actually, if they applicants are 100% limited company director, or both applicants make 100%, we can actually work off the net profit after tax and salary for affordability. If they have a shareholding between 20% and 99%, then it would be looking at salary and dividends as standard. So that would be what we would look at for a self-employed income, which I'm so surprised we haven't mentioned yet. So thank you for that question.
Yeah, brilliant. Gemma, I'll come to your question in a bit, because we're going to stick with self-employed for just a little bit. David suggested we use background information, but I think we've used that before. So thanks, David. We'll have a think. We'll go with something a bit more creative. Right, so from Raj, one limited company closed due to the sale. And if a newly set up limited company with proceeds, can you look at either buy-to-let or resi purchase with this case? Both line of business is the same consulting and design and online sales.
So for a residential, they would need 1 year's accounts. For a buy-to-let, we'd actually need them to have 3 years of accounts.
Okay. Hopefully that answers your question, Raj. Just going through. We've got Karen's details. Thank you, Karen. Gemma, we're coming to you in a second, so that's it for that one. Let's go back to self-employed. It was something I wanted to ask, and it's gone out my head, so I'll come back to you on that. If you've got any additional questions, do give us a shout, and we'll come back to you. Oh, that's what I was going to ask you. On the website, there's obviously all the information about the self-employed product and what the needs are, what criteria are, etc. Is there an affordability calculator?
Yes, there is. It's really handily as you log on to the website of saffronforintermediaries.co.uk. There's a pink toolbar that runs across the top, and that will give you your links to not only the calculator, but a way to contact us at Saffron. It will give you links to the products, a little bit about our development finance, which is offered by a different department, and the criteria section and supplementary documentation section. So just always look for that pink toolbar across the top under the logo, and that'll have all the handy sections for sort of a basic navigation around our website.
Lovely, thanks, Holly. Just for your reference, guys, because I know you're watching the chat room, Holly, Tony, but almost 2/3 of the brokers watching have had self-employed applications rejected. And I don't know if they're recent, but if they've had a recent rejection, Holly, this one's for you. Had a recent rejection, they think actually listening to us today, they might have got through that application into a dip. So how should they get in touch with your team? We'll do this now because we've only got 5 minutes left, but we'll do it again at the end.
Of course. So you've got the main telephone team that you could get through to. So our number is 01799 582 925. Alternatively, you can email us on bdm.enquiries@saffronbs.co.uk. And as I mentioned earlier, that live chat is on our website. It's in the bottom left-hand corner. And if there's a user available, then it will say click to chat. So please do get in contact with us there. We also have our fantastic on-the-road BDMs. So you've got Phil Lawford, who covers the North region. And I will give you his mobile number of 07970 939 744. And also equally as fantastic in our South region, you have Simon, who his mobile number is 07970 939 459. That is their work mobile numbers and not their personal mobile numbers, just to clarify.
So if you see them on the website, think I want a date, wrong number.
So yeah.
I went downhill real quick. So just David's made a very big point. You wouldn't be a broker if you had that application rejected. What we mean by that is if it's an application you think, well, I thought it had everything it needed, but it didn't get through, maybe there's a chance we get it through. So if you had a recent application go through, get rejected by another lender, get in touch with Holly's team and let's just see if there's something they can do for you. It's really, really important. Okay, we've got just a few minutes left. So I'm going to go to the questions I haven't answered yet. Holly, Udiah, for first-time buyer residential, what is the maximum number of borrowers' income you can accept for affordability calculation?
It will be 4 applicants for only 2 incomes, but if you go for a joint borrower sole proprietor, which is a 95% product that helps first-time buyers get on the property ladder with the help of a supporter who would be a close family member, that is the only scenario where we would take 3 incomes for affordability.
Wonderful. We've also talked a fair bit about people with adverse and issues on the credit file. But what if they've got no credit file? They've got a good salary, they're a first-time buyer, but they've not anything on their credit history. It's a little live with mum and dad, I presume, because everybody's got some form on their credit report. So what's your policy on that, Holly?
As long as their credit score is on Experian at around the point of 600, so the 600 score on Experian, then we can look to consider. It's just if they've got a bank account, that would normally show on their credit report. So we should be able to see something for them. It's just referring over to our underwriters, really. For our first-time buyers, we do have a minimum age of 21, but we can consider 18 or above, but that is subject to underwriters' discretion as well.
Wonderful. So that's just check I haven't got any in there. No, I think we've covered everyone's questions. Unless I've missed any of you, please do scream now, because we've only got a few minutes left. So do give us a scream and let me know if we missed your question, and we'll come back to it. So Tony, I'm coming to you. A big message here is for those, because we did have about 20% of people that haven't registered with Saffron before, or Saffron for Intermediaries before. Would you like to just explain the benefits of registering on the website? And I'm going to show you how to do it while you're talking.
Oh, fantastic. Yeah, exactly. Well, I mean, obviously the benefit of registering is that you can submit an application, which we can then hopefully say yes to. So that's tick number 1. The next thing is it's our easiest way for us to keep you informed with changes to products and policy and what's generally going on at the society. So once we've got you registered, we can then send you our regular communications. Now, we don't bombard you because we know how busy you all are and how many emails you get. But generally, if you get an email from us, it's one that you really should read because it will be something of interest to you. As hopefully Jay will show us on the website in a minute. To register, it's quite easy. You can see at the top there. Just click on register and then just start the process there with your company FCA number. And it's a very iterative journey that will take you through, and they'll come into Holly's team and we'll turn those round within a maximum of 2 days if it's a company, but we're doing that much quicker. If it's an individual, it'll be within 24 hours as well. So that's the easiest way for us to keep in touch. And when you're ready to submit a case, you haven't got to wait to register. It's there, it's done, and you can take advantage of it straight away.
Couldn't stress that enough. And obviously, this is where you can also find out when we're live every month, when the podcasts are out, as new product changes, criteria change, KPI change, LTV changes, all these different things. Well, I'll literally emailed out, but it's not bombarded. I think that's the key thing to get across. I know there's some reluctance thinking, you're just going to chuck things at me all the time, left, right, and centre. So just very quickly, as we come towards the end, Holly, you've been out and about. And Tony, you're out and about tomorrow, I guess, or here, should I say? Where are you and what are you doing?
So tomorrow we're at the MBE, so the Mortgage Business Expo, which is, Holly, remind me because I've forgotten the venue's name again. The Business Centre near Angel, Camden Way, I think that's it, isn't it, Holly, the address?
Yes, it's the Mortgage Business Expo, and it is at the Business Design Centre in London, which I know Jay is going to share the link as well to register. It's free registration, and we are at stand 24.
Yes.
So you'll spot us. We're very pink, and we've got lovely pink stand, and we've got some fantastic goodies, including the very special new water bottles that we have got. I'm still waiting for mine,
guys. Still waiting for mine. I can't wait to see the guys so I can get my one. But,
So no, look, if you're going tomorrow, do join us. You see Phil, Simon, and myself. We're also joined by Matt Hardy, who is a relationship manager with our development finance team. So if you have any development questions, Matt will be there as well for you. So we look forward to seeing you in person. That'd be lovely.
Brilliant. Well, I think that's it from us this month, guys. So I hope you answered the questions on the policy changes that Saffron have been through. Find out more from the website. We've shown you where it is and where to look. I tried to demonstrate while I was doing a screen share to you. Tried to demonstrate that you can do everything, the calculators, where they are, where the criteria like lookup is, all that kind of stuff. Don't forget today, if you would like a CPD certificate to prove your attendance today, just quickly in the chat room, just pop a yes, please. We have your details. We have your details from registration. So please don't pop all your details in the chat room, but just pop in the chat room. Yes, please. And we'll get those CPD certificates sent out to you. We're back again in November. David, that should answer your question. It will be emailed to you from the team. So if you just put yes, you would like a CPD certificate, guys, they're starting to come in now, beautiful. And then we'll get those sent out to you. We're back again in November. I want to say November the 10th. Which I believe is, November the 10th.
I believe so.
I'm going to have a nice special guest. All this is a bit secret at the moment. A nice special guest, a new theme with you very shortly. We will, with your details today, let you know when the next one is ahead of time, but also look out and register so that we can actually send you information and keep you updated. So that's it from us. A big thank you to Holly and Tony again. Really, really informative today. I think we covered quite a lot today. Any additional questions? Email Holly. She did give you those details. Pop on the Saffron for Intermediary website and just find the contact details on there. And we'll see you in November, I guess. So have a lovely day. Enjoy the rest of your week, and we'll see you soon.
Thanks all.
Take care.
Take care. Bye.